Hello everyone, welcome back to mForex and I'm Ming. In this video today we are going to discuss one thing that is a holy grail to your win or your lose in the Forex market. It is a trend. So what is the trend and how to determine the trend in Forex? And now we will talk about them, and of course I will give you some tips to help your trading process will be more easily. Now we come to the first part. What is the trend? The trend is a directional price movement, and there are three types of the trend: uptrend, downtrend, and the sideways. An uptrend is a sequence of rising highs and lows where each subsequent high and lows is above the previous one. And a downtrend is a sequence of the falling highs and lows where each subsequent highs and low is below the previous one. A sideways trend is a price movement without a clearly defined upward or downward direction. For more details on trend indicators, we will dig deeper into how to identify them by using our indicators. Firstly, the moving averages. It is one of the simplest and the most used indicators. We can consider moving average as the basis for developing other indicators, and it shows the average price value for a particular period. It is often seen as a kind of support or resistance, however, not as a straight line. The traders who place buy or sell orders when the price touches above the moving average continues to move in the direction of the trend. The execution when the price touches below the moving average also continues in the direction of the trend. Next, I want to talk about the average directional movement index. It is the index of the average movement direction. It is displayed below the chart of currency pair and comprises three lines: the positive directional indicators, the negative directional indicators, and the ADX itself. You can find the trend and find the best time for making trades and the profit-taking process. A buy signal in an uptrend is generated when the positive directional index rises above the negative directional index, and in contrast, the sell signal will be generated when the negative directional index rises above the positive directional index. If the ADX is self-rising, it is time for the presence of a trend, and if the ADX is falling, it is the time for thinking about the profit taking or making a cut loss. Besides that, we also have the Bollinger Bands. It is a set of the three curves drawn based on the moving averages and displayed on the chart of the currency pair. The Bollinger channel boundaries are not fixed and depend on the volatility of a financial instrument or the currency pair you trade. If there is no clear-cut trend, the price deviates slightly from the midline. As soon as the trend gains its strength, the deviation becomes larger and the channel boundary diverge. Bollinger Bands have a useful feature. The price stays about 90 or 90 to 95% of the time within the channel. The Bollinger Bands indicate buying in an uptrend. If the price has tested the middle line from above and it is heading towards a trend, and we will make a sell in a downtrend if the price has tested the middle line from below and is heading toward a trend. And now we will talk about another indicators. It is called envelopes. It is one of the indicators that we need to pay attention to trading. It is based on two moving averages, one of which is shifted upwards and another one downwards. The higher the market volatility, the greater the distance between the lines. If the price reaches the lower line during an uptrend, it is the signal to buy, and if the price reaches the upper line during a downtrend, this is the signal to sell. Besides that, we have the Ichimoku Kinko Hyo, which determines not only the presence of the trend, it will help you to find the support and resistance level, and of course it will give you the best market entry point. It consists of 5 lines. Tenkan Sen is a 9 period of moving average line, which reflect a short-term trend. The steeper its slope, the more clear-cut the trend movement. The Kijun Sen is a 26 period of moving average. If the price moves above this line, indicates an uptrend and you will need to think about a buy order. In contrast, if the price movement below the Kijun Sen indicates a downtrend, when it is more reasonable to make a sell order. Senkyou-A is the first leading line of these indicators. It is the middle line between the Tenkan Sen and the Kijun Sen plotted by the average period in the future. Senkyou-B is the second leading line, which is also the middle line between the Tenkan Sen and the Kijun Sen, but it is set in the Kijun period in the future. Chikou span is the chart drawn by closing prices and plotted by the Kijun Sen period in the future. It serves for the final confirmation of signals. The Ichimoku indicators open an area between the Senkyou-A and the Senkyou-B. It is called the cloud. If the price stays inside the cloud, it indicates a sideways movement. The Senkyou-A broken out by the price will indicate the beginning of an uptrend, while the Senkyou-B broken out by the price will signal the beginning of a downtrend. About the Parabolic Star, this indicator looks like a series of points placed above or below the candlestick. If they are below the price, this is a sign of an upward movement. The indicators generate manifold signals during the weak trends. If there is a clear trend, the point forms a long continuous line. Finally, the standard deviation is presented as a curve below the price chart. It displays the amplitude of the price swing relative to a moving average, namely the market volatility. If the standard deviation value is low, the market is slipping. If the indicator's value is high, the market volatility is significant. So that's all information I want to share with you in this video. Hopefully it will have you some information. Thank you for taking time watching my video. See you in the next one.